Hey everybody, today is Wednesday the 23rd, and the market did finish with a very nice gain here today. The one thing you'll notice on the daily chart is that we declined on increasing volume. The biggest volume occurred at that low point, and now we're advancing on lighter volume relative to that decline. Doesn't mean anything other than something to just be aware of because only price pays, and we are rising here in this market. It's got an extended near term. Let's just clean that up a little bit, and we'll put an anchor right here, and also at the recent high, the high for the year that is, which is right here. So these are levels we might find some supply before the market pulls back and presents a better opportunity for a purchase. But we do have that declining 20-day moving average still coming in overhead. So the market clearly has had a great run the last 3 days, and I wouldn't be a buyer just because it's above a rising 5-day moving average. The good news is that as much as we look at the broader markets and that sort of thing, our focus for making money is always on the individual stocks, and we've had some great names this week, including getting stopped out of Mobileye, MBLY, shorting that from here to down to there, and today having the COUR from over here, ACMR, Fastly the last couple of days. So, the action is in the individual names. And that's why I always like to say, we take each trade based on its own merit. The message of the markets was, we got stopped out of that short sale in Mobileye, and we got long some stocks the last couple of days, and they've been working out really great. And we don't have to have the market to agree with us, but as I always point out, we do, ideally we want the market to agree with our positions. And then we don't have that, then we take smaller share size, but we still take the trades because they're capable of doing this. When we buy a stock like ACMR yesterday at $13.90 per share, they're capable of these rallies, and we want to make sure we participate in some of them. So that's a key point that I think a lot of people, often ask, like, well, what if the market is declining or the market's below the declining 5-day moving average? What do? Well, we look at stocks like Fastly, and we buy that one today at a price of $19.55, and maybe we got lucky, maybe we're just participating in the momentum. But on a smaller scale basis, at least we're in there, and that's the key. We're not hung up on that 5-day moving average. So for the NASDAQ, we pulled back a little bit yesterday and then rocketed higher here today. We're right now at the conjunction of the 20 and the 50-day moving average. Same volume pattern in here, which is opposite of what we want to see for a healthy rally. We want to see advancing volume on the rally and diminish volume on the declines. Instead, we're seeing the opposite. So it just tells us maybe the conviction isn't there. But you know what? It doesn't matter if you're long because only price pays. That's what is always most important, is the price action. Of course, that's why I always remind myself with that phrase, only price pays. So we're not getting that type of pullback that we wanted to see, but it doesn't mean we can't make money on the long side, and that again is the key. I'd like to see it maybe do something like this. Who knows? Maybe this, the market's going to get hit on NVIDIA. I don't know. But we'll see what happens in here, and continue to focus mainly on the action of the individual names. The Russell 2000 is getting a little bit of lift here. This one is still overall the weakest. I mean, it's oversold and bouncing, and not nearly or much worse looking the rest of the markets. And yeah, you could say, well, it's finding buyers at the 200-day moving average and the year-to-date anchored VWAP, but again, it's just back into the midpoint of the range that it's been in for the last year. We just dropped fast from the high point of that range as we had the last two times, and now maybe we're just going to dick around in here. I don't know, but it's just not worth buying in my opinion. The semiconductors got back above the anchored VWAP from that high over there. Let's take a look at one from this gap, and that's just overhead as well. So maybe we're going to run into a little bit of selling in this area. It was pretty impressive the way that yesterday we saw it gap up and fail, and today we came all the way back up to where that market failed on the open yesterday. So clearly we've got some volatility, and there's more volume participation, it seems, in the semiconductors, which are again the leaders in here, but short term they're a little bit extended. So you might look at it and go, well, geez, that 5-day moving average didn't really help me. It did help you because it kept us from buying all this way down. And the people who started buying the dip over here, 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 and here, they still aren't at break even yet. So what we want to do is avoid this nonsense, and sometimes we miss some upside. But again, that's why we focus on stocks. The XBI, the biotech's getting a little bit of a bounce here. Still a broken market and a downtrend, not of interest to me. Financial stocks maybe starting to stabilize right here at that year-to-date anchored VWAP. You can see yesterday I tagged it, and that was the low. So now we're getting a little bit of a bounce, but with that 5-day moving average still declining, I'm not interested. Maybe it does something like this and then can get a little bit of a tradable bounce, but with a declining 20-day moving average, it's not likely to sustain. Doesn't mean it can't. Just we're always interested in what's likely, not the outlier trades. The energy names have been, kind of, just trying to hold this prior band of resistance and the 20-day moving average, and doing so in a very choppy way with a flat to declining 5-day moving average. Today they broke below that, and we'll see now if this is a little bit of a bearish trap in here, and if they can get back above 88.75, 88, that would make this a trap. Otherwise, they could be in for a deeper sell-off, so continue to avoid them for now.